Okay, great. Good morning and welcome to the Workforce Navigator series. My name is Matt Piesold and I'm a labor and workforce specialist located in Kansas City, Missouri. Today's webinar series represents an ongoing effort to connect local business leaders and other stakeholders to timely information that will allow them to make well-informed decisions. Today, it is my honor to welcome a great panel. Today we have Paul Taylor of Taylor Strategies. He's a former FEMA Region 7 director for the Kansas City region, and he'll be focusing on COVID-19 response and working with government agencies on disaster preparation and recovery. We'd also like to welcome Rob O'Brien back. He's a Small Business Development Center business counselor and a partner in O'Brien and Associates. He'll be speaking from the position of a disaster recovery contractor about business emergency preparedness. And last, but certainly not least, we have Jo LeDuc. She's the Director of Insurance Marketing Regulation Division of the Missouri Department of Commerce and Insurance. So today we have Paul, Rob, and Jo who will be sharing more about disaster preparedness resources for small businesses. I will now turn it over to Paul and he will kick us off. Paul?
Sorry. Okay, well, thanks, Matt. Feel very privileged to speak with you all today. I just noticed that Casey Hartline's on the line, and he'll keep me straight, right? Because one of my former colleagues from FEMA. But let me see if I can get my screen shared, and we'll be off to the races. It's a dreary morning here in Kansas City. Let's see. All right, can everybody see the slides? Or give me kind of a heads up on that.
Looks good.
All right, perfect. Okay, so today I'm going to talk a little bit, as Matt mentioned, about a specific slide on COVID and then disaster preparedness in general. And, specifically from the perspective of a business or a private sector interest. As Matt mentioned, my background is I actually spent 25 years in the military, in the Army, before moving back to the Midwest, where my wife's family is from. And so in 2016, we landed in Kansas City or just on the southern suburbs. And I was asked shortly thereafter if I would be willing to take on a role with FEMA, which was an appointee of the last administration serving as the regional administrator for FEMA Region 7. And so over the next 3.5 years, I worked with an incredible team of about 350 people. Our office was in Kansas City, but we worked in the greater Region 7 area, which was Kansas, Missouri, Nebraska, and Iowa, and worked any number of disasters. But probably the most significant ones were the Midwest flooding that happened in 2019, which affected all 4 of our states significantly. And so I was in charge of the federal response there. And then, of course, COVID. In 2020 and ongoing, I was actually appointed as a federal coordinating officer for all of the federal agencies that were coordinating a response to the coronavirus pandemic. So just a little note on my experience there. When I used to go and talk to anyone that was related to a private sector conference or chambers of commerce, or anything related to the private sector, I like to mention the fact that there's why should you want to be engaged with emergency management and with continuity, right? And there's some obvious reasons and maybe some not so obvious reasons that I think businesses getting involved in this type of risk management and outreach is valuable. The obvious one is you want to protect yourself, your business, and your employees, right? So there's a business continuity perspective. So if there's in the event of a disaster, either man-made or natural, you want to make sure that your business interests are protected, right? Not only from a revenue perspective, right, and preserving your ability to be open and to make money and to continue to do business, but also from an employee safety perspective, right? Whether you're a company of just a few employees or a company with thousands of employees, I think we all have a responsibility to make sure that we're looking out for the welfare of those employees and their families, right? And so business continuity and emergency management has a lot to do with that. And what you do in your workplace matters, to not just from a continuing to do business perspective, but also from a life and safety perspective for your employees. I also think that businesses are, they have a community, they exercise community leadership, right? I mean, business leaders and people that work at, it doesn't matter if it's a small mom and pop or a large business, you have an outsized role in terms of the influence that you have in your communities, right? And so if you're interested in emergency management and continuity, other people are going to be interested. And so it's great that, as you take on more of the mantle of risk management and thinking about emergency management and protecting yourself from disasters, that spreads because you have a lot more influence in the community, maybe even than you realize. You also have a leadership role when a disaster happens, right? Because people will see not only you exercise that leadership, and potentially if you are, providing resources to a community as they recover from a disaster, but also being open for business means a lot, right? There's an old adage in FEMA about the Waffle House effect, right? Or the impact of a Walmart closing, right? The impact of a Walmart closing isn't just to the revenue stream for Walmart. The impact of Walmart closing is that people don't have access to all those things that they buy, right? These kinds of places and even smaller businesses are really community hubs that people in the aftermath of a disaster, they look to you all to be open, right? And so it makes sense that we prepare for that. Businesses oftentimes represent critical infrastructure as well. And when I was in FEMA, our good partners at CISA, the Cybersecurity Infrastructure Security Agency, were very focused on identifying, utility companies, medical facilities, businesses that also represent critical infrastructure that we want to think about in terms of a larger role of protecting, and then also making sure that we recover very quickly so we can get those businesses back up and running. And so it may be that your business is, we would consider that critical infrastructure, and that's just another reason why you should be concerned about emergency management. And then, of course, philanthropy. We have many businesses. This picture is of a convoy of Hy-Vee trucks that were being escorted by the National Guard during the flooding last year. It happened up in Nebraska, actually, into a community called Fremont, which was effectively cut off for almost a week because of the flooding. And as soon as that community opened up, we were able to, with Hy-Vee's help, get supplies flowing into that area. And so those were donated goods, right? In many cases. And so businesses have resources that they can commit during a response, right? And I know anyone that lived through the Joplin tornado, right, understands the value of contributions and donated resources from businesses or the private sector, because they were a large part of getting that community back up on its feet after that event. So let me just go to the next slide and switch gears a little bit and talk about COVID, right? COVID is obviously different than a traditional disaster. But there's a bunch of things on this slide that I think businesses ought to be concerned about as they prepare for reopening, right? Maybe you're open now. Maybe you're struggling with the decision to reopen, or maybe you have a phased reopening approach, all of which should be in accordance with public health guidelines, of course. But, I won't go over all those things, but, I think it's important to think through, how are you making those decisions, right? What are you underpinning the decision? If you're a restaurant, right, how are you deciding to go from, 25% capacity to 50% capacity, right? In some cases, the state or the local government may mandate that, right, through the health department. But if you're not a business that's regulated through the health department, how are you making those decisions? If you're a regular business that has its employees potentially have had them on remote work and they're going to be coming back to work, how do you make those decisions, right? Where do you get that data? Who's in charge at your company of putting their arms around COVID and thinking about all of the things that you as a business leader, as a boss, as a CEO, as a manager, as a director ought to be thinking about? And so I would suggest that it would be a good idea to wrap your brains around where are you getting reliable data and who's in charge. Looking at the last year, I think it's a good idea to do an after action review, right? How has your business responded to COVID over the last year? What are the good things, right, that have happened? And what is the stuff that you're just going to flush after this and think, God, I never want to remember 2020 again, right? But I think it's always useful for an organization to sit down to think about those things and sort of so you don't throw the baby out with the bathwater as we start to emerge from COVID. What does your facility need, right? What are those health and safety mechanisms that allow you to play offense as opposed to defense, right? Masks, hand washing, sanitation, temperature checks. Those are all defensive mechanisms, right? But what are the things that allow you to play offense? And right, I'm not an expert, right? But there are things that you can do with increased air handling, right? Ventilation, air quality in the building, right? Things that allow you to actually deal with the threat and reduce the threat of COVID in your workplace, and people can come back safely, right? So you have to have the ability to look at those things. Also think about all your employees. I mean, when I was running the FEMA office here in Kansas City, that was the first thing that I worried about every single day was, what decisions did I need to make about our own employees' safety? Was it safe for them to return? And now after a year of many folks working remotely, how would I do that, right? Because you can't just flip a switch, I don't think. So you have to think very deliberately about folks coming back to work and the emotional impacts too, right? Of having been at home and not in the workplace for a year, right? What are their kids doing? What are their families doing, right? Situations have changed significantly for people, and you want to approach that, I think, deliberately as an employer. How are you communicating those decisions, right? What happens if things go south and we have a hybrid and that forces us back to remote work or more remote work? What's your plan, right? There's a lot of funding out there as well, federal funding, as well as funding for the private sector. And you want to make maximum advantage of that. And so it's worth the research to figure out from all the different bills, the CARES Act, the CRSA Act, the ARPA Act, the funding available through SBA, FEMA, and HUD, what can you take advantage of? And what can you do with that to creatively mitigate the COVID threat? Vaccinations. It's an elephant in the room. Are you going to require vaccinations for employees to come back to work? I can't give you the answer to that, but it's something you certainly need to consider as vaccines become more and more available. And listen, it's a chance to think about your wellness programs too. I hope that most companies would think about that, but there's a pandemic always reminds us that we need to be engaged with our employees on wellness. Okay, so getting started, in emergency management, the first place is you have to understand your risk, and so there are various ways to do that. The first is probably to talk with your local emergency manager at the county level or even the city, because they can point you in the right direction. It's more than likely they have materials that can show you, but you gotta do a risk assessment of your business, right? And what types of risk are involved. And then there's a lot of resources out there. I don't need to talk about each one of them specifically, but there's a bunch of agencies that I list up there, both not for profit, private sector, and also with government, that you can look that will get you up and running if you don't know how to do this, right? There's groups that you can engage with. There's various public-private partnerships that basically bring businesses together to talk about areas of mutual interest related to emergency management and disaster relief. There are some in the Kansas City area. There are some in the St. Louis area. There may be groups in your local area either a COAD, which is Community Organizations Active in Disasters, an LRPC, which is a long range planning committee related to your emergency management department, or a lot of times the chambers of commerce are interested in disaster preparation. And all of those venues may provide you with a chance to get together with other people that are thinking about this stuff. Of course, exercises are a great way to get involved. And, you really want to get your employees involved at work as you start to exercise your disaster plans. Because one of the things that we always talked about at FEMA was businesses, it's actually been studied, businesses that are involved with emergency management, have good continuity plans and involve their employees in that, those employees are way more likely to go home and mirror those practices and start to work with their families, right? And other community organizations that they belong to do the same things. So you have an influence effect throughout your communities. And just really in general, again, thinking about how you would go about getting engaged. I suspect that since some of you are on this webinar, you care about emergency management and you may be well on your way. Others may have jumped on because you're a business owner or you have you're involved with an organization that wants to get involved and write a disaster plan, right? So the first step is always thinking about the risk involved, right? And there's lots of risks to your business. One is physical. If you live in a place that's subject to tornadoes, is your business safe, right? There's a cyber risk, right? That seems to be an ever-present risk in today's society, but there are things that you can think through to deliberately mitigate that risk. What are the risks to your business or revenue loss, right? And they're not all natural disasters. And then, of course, employee health and safety is a concern. Oh, that's my timer for my time's up. So I'm gonna wrap up. But of course, once you've identified the risks, then you have to work to mitigate those things, and you can do that by writing a plan for your business, establishing who's in charge during a disaster, figuring out how you communicate with all of your stakeholders, and that's your employees, management, your customers, your suppliers, right, about what's going on with your business, and how everyone should be safe and when you're going to be reopened again and all those kinds of things. You need to look at the impacts of a supply chain disruption, right? If other businesses that help you are affected, who else can help you? Not just businesses, but governmental agencies. Who are the people that you need to establish relationships with now that can provide mutual aid? Redundant power is something we always talk about. It's kind of the no-brainer, but in today's world where everything is server-based, especially, you need to make sure that that's backed up, right? And you can ensure little to no power loss at your business, at your facility. And then you need to practice it. And then you need to look at, we're going to have Joe on at the end, but you need to look at how you insure against loss as well. So, I know that was very quick, and we put two very big topics, the idea of emergency management in general for businesses together with COVID, but I'm happy to answer some questions after the other presenters. Or, I had my email up on the first slide. I'm happy to answer questions after the fact or help you in some way if I can, using my former role and hat with FEMA or what I'm doing now. So I will, either, pass it back to Matt or pass it to Rob O'Brien at this point.
We'll just pass it over to Rob.
All right, and thank you. And Paul, thank you for being on today as well. Lots of good information there that hopefully we'll build on a little bit as we go forward right here. The little bit of my background, I was president of the Joplin Chamber of Commerce for 23 years. That included the Joplin tornado, and it was a big learning lesson across the community for many organizations. Also, in the last year or so, I've been a contractor through a company called J&M Global Solutions on disaster assessment and disaster recovery. First for the Economic Development Administration on the Missouri flooding, and also for the SBA on a project related to funding sources outside of the many things the SBA has brought forward during this COVID pandemic. So the one thing that I think Paul touched on well here is that disasters do happen. And if you are a business or if you are an organization that supports the community or support businesses, people are going to be looking to you for leadership. And how can you provide that if your operation is damaged or completely closed? But we do know that there's lots of things that happen, not just natural disasters or COVID, but also burglary and vandalism, accidents on the side of the property, a data breach, fire. There's a number of things that can happen to organizations, and you need to have a disaster plan. This is not a disaster plan. So you do need to be planning for disaster. Some of the things that Paul had touched on are here, and I would mention, I would imagine Matt and Amy will post this PowerPoint and the others online after this program, so they're available. But you need to make sure that you're assessing the risk and considering the impact on your business and organization. Have your employees engaged and revise and train. So your high level goals in this are going to be first and foremost your protection of staff, your business continuation, and ways to mitigate the financial impact of the disaster. There are a number of state and local regulations and ordinances that you might need to be aware of, and particularly if you deal with hazardous materials or major issues that engage safety for employees, you need to make sure you understand those and are able to address those in the event of a disaster. One of the things that I like is preparemybusiness.org, and on that site you can find, I think, a pretty good checklist that helps you go through on kind of a 1 to 5 scale, as you can see here. What's the probability, what's the impact on this 1 to 5 rating, really creates an opportunity to look at your operation, look at the risks that are out there, and give some thought to what are the ways that you can begin to address those. But some of those impacts that to be considered, that you could have delayed sales or revenue. You have replacement expenses, especially for physical and equipment damage, increased operational expenses. And we've seen that even in COVID, as many businesses have worked harder on both their safety for employees as well as for customers, and the cleaning and increased safety hygiene that have been put into place. There may also be contractual penalties that could be incurred in terms of delivery of goods and services. And then you could have customer loss or employee loss that makes it more difficult to operate. So you need to think about developing your plan. What resources will you need, which can be financial, it could be a facility, it could be having a disaster kit. And I would mention in that regard, as you look at that for your business, it is also a good opportunity to visit with your employees about that, so they are prepared at their own home for themselves and for their families to respond in the event of a disaster. The first responders we saw in Joplin, and I think is typical in most natural disasters for sure, are the friends and neighbors that are there, and people getting out to help each other. So the better prepared we are at our own homes, the better we are prepared to help our overall community. How will you communicate with your employees and customers? What's your business continuity plan? What about your information and how the technology and your data is kept, and of course, training of staff? And in that regard, you really should engage your team upfront. Let them be part of the planning, let them be part of that assessment. And then you revise the input and review, and then keep training your employees and testing what you're doing. As Paul noted on his last slide, exercise, exercise, and more exercise. That's, you can do that for physical health, but you also need to do that with your disaster plans and how you respond and make sure everyone knows what's going on. More specific to our experience in Joplin a decade ago now, was we took a survey 1 year after the tornado, and we had 40 firms of all sizes and impact. And by impact, that ran the gamut from businesses that had no physical plant impact, very minimal or no employee impact, but they may have had impact with the loss of customers. They may have seen a loss of their clients that they did business with on a continuing basis, and they really were struggling. Others had kind of the reverse of that. They were the ones that were right in the right place, if you will, at the right time with the types of goods and services they offered, and they suddenly had more business than they could deal with. And so it was for them evaluating how they could respond and be part of that recovery, with also not putting themselves in a position on down the road as things return to normal, that they were overextended. Those were some of the firms. We had others that were completely devastated. Their facilities were entirely gone. They lost employees and literally through death and injury lost employees, and were really struggling to figure out where to go next on that. With this group of 40, we asked them what they had done that worked, what they would recommend, and we put that together in a series of recommendations to share out. But here's the highlights of those. One is have a disaster plan. We've talked about that, and that was the strongest encouragement they had. Those companies that did have a disaster plan had really thought about the process, rebounded more quickly than those that did not. They may not have contemplated what actually happened in the disaster plan, but they had thought about it and they'd taken steps to be better prepared. And consequently, they were really able to respond more quickly. Joe is going to come to this in a few minutes, but be fully insured and know what's in the policy. There are nuances within insurance policies that is, when you first put your insurance policy in place for your business or organization, and then you don't revisit it because it just goes along, you really need to check in on that fairly regularly to know what's there, what's covered, and how to work with your insurance agent on that. How do you have communication channels with your team members and with your key vendors and with your customers? What are they? How do you keep everyone in touch with the status of your business? Paul touched on this, but you need to keep your data backed up, secure and available. And part of that is having paper copies of all key company documents in a safe deposit box in a bank. And we had the experience of having several bank branches that were reduced to rubble, and yet the vaults were still standing and the vaults were secure. and people were able to access their information after the banks had taken steps to make sure they'd pulled the rubble away from those bank vaults and that the site was safe, but the company's documents were safe. Also, in difference from a decade ago is that it's easier to back up online and in the cloud, and that could be and should be a part of your plan. But having your key papers in a safe deposit box and where you can reach them physically is a real good step to make sure you're ready to go. Our folks also talked a lot about having laptops or tablets set up for wireless, even having personal ones at their homes in case the business was destroyed, and having cell phone connectivity. The cell phone companies are very good at rolling in temporary towers to help restore that in event of a large-scale natural disaster. Have redundant internet service if possible, and have backup power. You heard that earlier, but it's very critical, and also an alternative location. And then keep handy a resource list of all your key contacts so you can get to them immediately and not have to be digging through a pile of paper or the ashes to find those contacts. So those are pretty critical things to have. Those are key people who can help you in the event of disaster. And then there are the support entities, chambers, the small business development centers, your trade associations, SBA, the US Chamber, and FEMA all have resources that you can use to help build up a disaster plan for recovery. Some of the other recommendations they had, Facebook and social media pages. Most companies have those now, but use those to keep people up to date on the status of your business or organization. As we mentioned, resources for employees to make sure at their home they can be prepared for disaster. And think about your long-term needs, not just the immediate, but recovery, especially in a large-scale disaster, can take longer than you think. And you need to plan for long-term resources. And also, our folks said you make the best decisions you can in the event of disaster without second guessing yourself. You need to be able to move forward and be proactive. A good disaster plan will help you with that. And then they mentioned always be kind to yourself and your team, your family, and everyone with whom you are working. It's a very stressful time, especially in a large-scale disaster community-wide. Everyone is working very hard to try and have recovery. And every now and then you just have to give yourself a little grace and say, we're doing the best we can, and everyone else is too, and understand that as you go along. Here are some sites for guidance. Again, I believe Matt and Amy will put this out later, but also on there, you can see my email address, and you're more than welcome to reach out if you would like a copy as well. And with that, I'm going to turn it over to Joe to talk about the very critical thing of insurance.
Thank you very much. First big test here is making sure that I can share the screen. And I think we're up and running. Thank you for having me. My name is Joe LeDuc, and I'm the Director of Insurance Market Regulation for the division in the Missouri Department of Commerce and Insurance. And I am going to take a little bit of a different approach today, and going to talk more about making a financial recovery plan as opposed to actually preparing for the physical disaster itself. And I think we've already heard about, preparing, making a plan, understanding what your risks are, and actually making the plan. So I won't spend much time on that. But it is important for you to understand the types of business property you have so that you can make an appropriate plan for recovery. And generally speaking, the types of business property that are damaged or most important are buildings, which is your commonly called real property, and then the personal property of the business itself. And so here's just a list of a few items for you to think about as you sit down and make your plan, because it can be daunting to just sit there with a blank piece of paper or even one of the checklists in terms of preparing. So things that you need to think about is, what sort of furnitures and fixtures or equipment and supplies might be damaged or lost in the event of a disaster or an event. What kind of machines do you use? What are your computers or your software exposures, your inventory, valuable papers, books, and documents? We heard some great information already about how you can help protect that. But you also need to think about your mobile property. And by mobile property, I mean your commercial automobiles or your trucks or aircraft, if that's what you happen to have as part of your business. And then also think about the personal property of others that you might be responsible for or in charge of as a result of the nature or the scope of your business. I often think or use the example of a dry cleaner when talking about personal property of others that you might be responsible for. And then recognize what your financial or economic impact might be if you were to lose either access to your building or the items that of personal property, business personal property, are actually destroyed or damaged as a result of a loss. And once you know what that economic or financial impact might be, you can actually start making a financial recovery plan. And the financial recovery plan is important not only for you, but for the broader community as well. I think, we heard earlier from Paul about, it's more than just your recovery. It's the recovery of the community. And the more businesses and individuals that have financial recovery plans, the faster not only will you and your business be able to recover, but also the community as a whole. And while I am with the insurance department, I just want to point out that there are other ways to manage your risks other than insurance, although that is a key component. So just quickly, you can, accept the risk of loss. So maybe you're looking at a piece of equipment that you have that you're not using, that has no real market value, but is just sort of there. If you were to lose that, what would the financial impact be? And if it was minimal, maybe you just accept that if it's gone, it's gone. Another way to approach a financial recovery plan is looking at ways to reduce the risks and, putting all of your key papers and documents in a safety deposit box or backing up to an online website or server. Key information and contacts is a way to reduce your risk. So you're taking steps to ensure that you don't suffer a complete loss, that you can get back up to speed a little bit more quickly. And then another alternative risk management tool might be just to allocate resources, to just say, okay, I know that I need to start saving for a financial, as part of my financial recovery plan. Although, each of these methods in all likelihood is not going to be sufficient to cover the risks in the event of a disaster. And I don't mean it has to be a wide scale disaster. If you have a building and your business burns down and your business is the only one that burns down, that's a disaster. It's a disaster to you, but not necessarily a disaster in terms of a broad scope. So I think of the word disaster or loss in very broad terms. And then, the last piece of making a financial recovery plan, and probably one of the most important pieces, is the insurance aspect. And basically, when you purchase insurance, what you're doing is you're choosing to transfer that risk of loss to an insurance company who's willing to accept that risk for a stated premium. So what does insurance do? Well, it's a means of protecting your business from financial loss. It is often a very key component to a financial recovery plan. And it's important to note that it may not just be a result of natural disasters in terms of being able to protect your business from financial loss. So while I'm going to focus more on the property and the natural disaster type risks, know that it's more than that. And there's a lot more covered under the terms of an insurance policy that you should be aware of. I do have to, offer a disclaimer. I am not an insurance agent. I am not selling insurance, and I cannot recommend or endorse any insurance company or insurance product over another. So it's very important that you do seek professional advice. And we saw a list earlier of key contacts that you would want to keep as part of your recovery kit or your disaster kit. I would highly encourage you also to put in the name of your insurance company and the name of your insurance agent, especially if you are using insurance as part of your financial insurance recovery plan, because you'll need to be able to get a hold of them quickly as if something happens. So key considerations when you're purchasing insurance. Your insurance needs are going to be unique to your business, and no two businesses, even if they're sort of similar businesses, have the same insurance needs, because there's a lot that goes into, your risk tolerance and how you address risk. So understand that your business is unique. I saw the term fully insured on Rob's slide, and it did send sort of a chill down my back, because there is no such thing as fully insured. Policies have exclusions. So it goes back to the point of knowing what's in your policy. Not all of the losses are going to be covered. So you're going to have to understand what is or isn't covered in the policy or policies that you purchase as part of your financial recovery plan. And we heard also that coverage varies, not only from company to company, but from policy to policy. And what's covered by one policy may not be covered by another policy. So as you're shopping and looking to build your plan, it's important that you ask questions about each policy and know what's in your policy. Insurance is the one product that we buy that we hope to never use, which is a very strange concept. You buy it, you have to, but you don't ever want to have to use it. And so most people, and I don't blame them, because I've been guilty of this myself, I buy a policy and then I tuck it away. And looking and reading your policy after a loss is not the best approach to making sure that you have a full financial recovery plan, because it is quite possible that perhaps you thought something was covered when in actuality it's not. So know your policy, read it. I know it's a horrible task, but some nights when you can't sleep, give that a try. There's many different options for insurance, commercial property coverage, and I have a fair number of slides that, in the interest of time, I'm going to skip through, but you'll also need to look at flood insurance, earthquake insurance, mobile property insurance, and by that I mean the commercial auto insurance or trucker's insurance or garage insurance, so anything that's out on the road. And there's some other coverages that you'll want to look at. So I'll go through those in a bit. And then home-based businesses offer also a unique sort of situation that I'll talk about quickly. So here are some coverages or some things that are covered under commercial property coverage. There are three basic forms of coverage. There's a basic coverage, a broad coverage, and a special coverage. In the basic and the broad coverage forms, you only have coverage for things that are specifically listed in the policy, those perils of loss, those causes of loss. But I can guarantee you, in almost every instance, earthquakes and water damage, including damage from flood, are excluded along with other things. So you'll need to look at that and take other steps to ensure that you cover the risk. The broad coverage just includes a few more things, but it has the same exclusions for earthquakes and water damage. And the water damage that is covered under a broad coverage form is very narrow in scope, so it's not going to cover floods. Under a special coverage form, basically that policy provides coverage for any direct physical loss unless the cause of that loss is excluded. This used to be referred to as an all risks policy, but there are a lot of exclusions in there. So it really isn't an all risk policy. It's not a fully insured policy. You have to look at the exclusions. And again, earthquake, floods, and other things are excluded in these types of coverage forms. For a small business, you would probably get this under a small business owner's policy. And I mentioned that just so that you're familiar with the term. A BOP policy combines both liability and the commercial property coverage. But either way, the floods and the earthquake are not covered. So you're going to want to address that issue. Even if you don't live in a high risk zone for floods, floods happen, and they can happen anywhere that there is water. And in fact, according to FEMA, 20% of all flood claims are actually out of areas that aren't considered high risk. And the coverage will then help you cover the cost of repairs caused by a flood. There is a 30-day waiting period for flood insurance. So the time to get flood insurance is not when you see the waters rising, because that's probably too late. So you're going to want to plan in advance and definitely consider the potential for flood insurance as a part of your disaster recovery plan. Earthquakes are not covered under commercial property policies either. So you're going to need to either purchase an additional endorsement to your commercial property policy that adds the coverage, or possibly look at a standalone policy for that. Different from flood insurance, this is effective immediately, so there's no waiting period, but you should get it when you're looking at your overall package. And the deductibles operate a little bit differently. They're not flat rate. They're a percentage of the coverage afforded. So that's something important that you'll need to know in terms of setting aside other resources and finding other ways to cover your financial losses. Commercial auto policies, this does provide coverage. The comprehensive portion of a commercial automobile policy does provide coverage for earthquakes and floods. But if you are a garage owner or a truck driver, you will want to ask about specialty coverages and make sure that you have the coverage that you need in the event of a loss. Other things to think about are business income continuation coverage, extra expense coverage, dependent property coverage, utility service coverage, and possible civil authority coverages. So the business income coverage will provide lost income in the event that your building is destroyed, or there's a physical damage to your property that prevents you from operating your business. Extra expense coverage will help you with those extra expenses that might be incurred to get your business up and running more quickly. So maybe you can move to an alternate location, but it requires that you put out or pay extra money in order to do that. Extra expense coverage would help with that. The dependent property coverage would help in the event that the property coverage of a supplier that you're dependent upon is damaged. Again, your unique needs are going to be driven by your business model. And if you don't have any dedicated suppliers that if they were to suffer a severe loss that would cut into your business, maybe this coverage isn't appropriate for you. Utility services coverage, if you don't have the backup generator, this might be one way of getting some business income or extra expense coverage if the public service or private utility company is not able to provide power for a long period of time. And then civil authority coverage would also provide similar coverage for things in the event you're prohibited from opening your business because of a physical loss in the proximity where the local authorities say you cannot go into your building, even though your building may not have suffered direct damage. A home-based business, A lot of the risks are very similar to a general business operating outside of the home. So a lot of what I've talked about applies. A very big misconception that a lot of business owners have is that their homeowners policy will cover losses to their business. And that is not true. There will be gaps in coverage that you'll need to consider. Unless you've added earthquake insurance to your homeowners policy, there is no coverage under that for your standard homeowners policy. There is no flood coverage under your homeowner's policy. And in addition, there might be limitations or flat out exclusions on your business property. So you're going to want to look at ways to cover those gaps, either through endorsements or through the purchase of another policy. So that was a lot of information, and I went through it quickly. I know that. So I am happy to answer any questions that we might have.
Thank you, Joe. So at this point, if you have any questions, feel free to turn on your microphones or post a question in the text feature, the chat feature, and we were more than happy to either read them out and ask them for you, or you can ask them directly. So just to kind of kick off the conversations, sometimes it's useful for our attendees to just hear some scenarios, something that maybe worked really well and how you really were able to keep a business and their doors open. I mean, I'm sure there are lots of stories like this, but just thinking through these scenarios, kind of not just from a strategic plan point, but through a story format almost sometimes is helpful. So I don't know if Rob, Paul, or Joe can share any examples of that, of how it really made a difference, kind of more at a personal level, something like that.
Yeah, well, I think, Matt, one of the things we saw in the tornado, and as a chamber, we were pretty aggressive in reaching out to businesses and staying in contact with them consistently for really a long period of time, checking on their status. Are you open? Are you planning on reopening? Are you moving? That type of thing. And I think what we learned in that process from working with the multitude of businesses was it really is important for them to be very aggressive in updating their status through every communication channel possible. You can't necessarily assume first that because people know you've been there for 20 years that they know your doors are open, because especially in a large scale natural disaster like that, people are not necessarily focused on the business specifically, and they may not know the status of the business, and they're looking for ways to check on that. The other thing is we had businesses that didn't move, and it became very important for them to really get the word out that they had changed locations. One other thing that we saw, though, which is maybe the caveat to both of those, is those kind of disasters can also change the makeup of a community. People start looking at different ways to get to places. You have areas that were once were a number of rooftops, that businesses really had that very localized market. And if those rooftops don't come back very quickly, the business may really struggle, because they went back, everything was fine, but their market just isn't there. So I would say sometimes it's not a plus to rush back and rebuild. If it's a matter of making repairs and reopening, one thing, but if you have to completely rebuild, it might be wise to take some time to really assess what the market has done and where those rooftops are going on the rebuild before making that commitment. There's a